So what if you could reclaim 100% of your cash flow every year, money that you're losing to mortgage interest, credit card debts, and hidden opportunity cost? According to the 2023 Federal Reserve Survey, non-investor homeowners lost between $24,000 to $50,000 annually as an average to these negative wealth transfers. Ladies and gentlemen, what we don't understand is that every time we make a debt payment, every time we make a mortgage payment, every time we make a 401k loan payment, every time we make a 403b loan payment, it is a negative wealth transfer. Why? Well, in terms of qualified money, you're still building up that tax burden. In terms of debt, all of your money is being used to create 5 different tiers of profit for the bank, and you participate in how much of that money? Absolutely nothing. Ladies and gentlemen, I'm Jeffrey Taylor, your wealth architect. In the next couple of minutes, I want to show you exactly how these financial leaks occur and how to plug them up with a system that I teach called the trifecta formula. I want to keep you from falling into that mistake, and I want to help you grow your money in every dollar that you have without creating and avoiding as much in negative wealth transfers as you can. So, have you ever asked yourself, why isn't my network growing faster? Ever thought about why you're making every payment on time, but something just feels wrong? You're wondering why you're not getting ahead. I may mention in another video, that's what I call the financial real feel, where you make great money, you're doing all the right things, but you just don't seem to be getting ahead like you should because you're not. You have a substantial amount of your money going to taxes. You have a substantial amount of money going to interest and interest payments and debt, and you're not reaping any financial reward from that. And that's the part that I want to help you turn around. The good news is that once you identify these leaks, once you identify these negative wealth transfers, you can stop them and redirect that money into a growth engine that works like your own private banking system. This is one of the most powerful revelations that I teach in my series of classes, and I want to make it available for you today. So here's what the data is telling us about property owners, is that they're forfeiting as much as $500,000 over a 10-year period in mortgage payments. Yes, you're making your payment, you're paying for the properties. Yes, 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 yes. But we're forgetting the fact, because we're looking at it as a debt, that is massive profit that the bank is making because they're taking that $500,000 and they are turning it over and over again by reloaning that money to other people. As they reloan that money, one tier leads to the next tier, to the next tier, to an infinite banking system where each tier is creating profit from your $500,000. Now, let me ask you a question. How much of that money do you participate in profits? Absolutely nothing. So how do we look at this thing, and how do we position ourselves so that we can reverse engineer our amortization tables to learn how to create our own banking systems from our own debt? Okay, so let's take a look at this. I want you to take a pencil and a piece of paper. I'm going to give you a couple of talking points. I want you to pull together 12 months of your statements. Doesn't matter which account you want to use. Your mortgage statements, your credit card statements, your auto loan, your boat loans, whatever loans that you have. Okay. The second thing that I want you to do is I want you to list each payment and the interest rate for those payments. So if payment credit card is 21% APR, I want you to list that all the way down. List each one of your debts with the interest that is on that debt. Number three, when you look at the interest rate that you're paying to the banks, that you're paying to lenders, I'm going to ask you a question. Is your savings rate of return as much as your credit card and debt rate that you're paying? And if it is not, you have a problem. The question is, do you want to turn and reverse this so that you're creating more rate of return than you're paying on your credit card? What if you were able to reposition that and put your money in a cash reserves? I use Index Universal Life. Put that money into a cash reserve, build it up, and then use it to transfer the debt so that you can begin to create interest, cash reserves. Those of you who follow me, you know where I'm going. A cash flow, profit, and velocity of money from that debt. Let me give you a good example of this. Meet Sarah. Okay, let's just call her Sarah, right? She's paying $700 a month on a credit card. That credit card has an annual APR of 21%. Now, what she's thinking about is taking $700 of her own budget to look at if she put money into an Index Universal Life policy. She's assessed her death and living benefits and all of that kind of stuff. And once she does that, she's looking at how much time, well, what would happen over the next 10 years if she began to recycle her own money and use the system that I'm talking about to actually make profit from her debt. So let's just walk through this. She takes $700 a month. She puts it into an Index Universal Life policy. Now, remember, we're going to have internal cost, okay? And we know that internal cost is going to impact the amount that you can take out on the back end. And that's okay. It's supposed to work that way. But in her case, what she did, because she understood this, she took $3,000 per year. Listen to this. She takes $3,000 per year in policy loans to pay down her debt. Now, as she does this, she sees that every time she takes a policy loan and she pays down her debt, she can actually see that she's earning interest on her debt. And as she pays down her debt, she takes the cash flow difference because the payment is lower. She takes the difference in that payment and uses that to pay back the policy loan. And she looked and she realized that after 10 years, she would make tens of thousands of tax-free dollars. This, ladies and gentlemen, is a strategy that the average debt holder is just not using. If more of us were using this type of system, we would see fewer bankruptcies, we would see fewer people in financial trouble, we would see more frugal use of debt. And my real estate investors out there, if you are not utilizing this system, you are forfeiting a massive profit opportunity for yourself in learning how to create an arbitrage through debt transfer with life insurance. So, hey, if you want to learn more about this, I want to give you a free reserve builder worksheet. So take a moment, subscribe to this channel. You can download the reserve builder worksheet. I'm giving that to you free of charge, okay? I'm also giving you 15 minutes to go through it to answer any questions that you may have about your situation to see how I might be able to help you learn the art and science of recapturing 100% of the debt that you are paying out. Listen, it's time for you to start thinking more like the banker and less like the borrower. It is time for you to create the 5 miracles of wealth and begin the process of avoiding losing money. Listen, it's been fun talking with you. I love to hear more from you. If you got questions, certainly you can ask them, or you want to reach out to me to teach a class for you guys. Hey, I'm available. Let's talk about it.